Hello, everyone, and a very warm welcome to today's major markets update for Thursday, November the 7th, 2024. Yes, another webcast because there will be no update on 1108 and 1111, meaning no update tomorrow and no update on Monday. I'm out of the office. I will be traveling and I will have no time to provide any updates. However, most of the markets are tracking along with the impulse wave count higher. And we will also state and restate that we remain bullish on the markets, continued on holding above the warning levels, which we can raise slightly, of course, as price moves higher. And today we will also go a bit over the big picture as there are some interesting developments that suggest this bull market is not at all over yet, though we might soon see some intermediate term pain coming along, but that we are not there yet. So I hope you appreciate this little bigger picture update. And then last but not least, we always recommend and have always recommended selling into strength and raising stops, all those things, but we do not advise shorting this market. So selling into strength and raising stops is not the same as saying short the market. All right, this is still a raging bull. That is for sure. We have been bullish even if we anticipated a larger pullback with a more pronounced ABC, as you might recall. That would, for example, for the SP 500, get us to 5,800 for a bounce, and then a drop to about 5650 plus or minus 50, and then a rally. Well, we didn't get the bounce. Also remember that the short term is always more variable than the longer term. On a daily basis, you pretty much have 51% chance that tomorrow will be green and 49% chance it will be red. If you go on a bigger time frame, almost years out, you will probably have 90% chance it's green and 10% it's red. So big picture is entirely different than the short term. So try not to focus too much on the short term because it is much easier to get burned because of the inherent variability of the short term for the markets. That's just the nature. So we always recommend selling, even if the markets goes higher and you sold. You can always rebuy, you can always reposition. That's fine. You can always catch the next bus, but please be advised. And this is not because of some feedback we got. I just want to make sure that we're clear on what the difference is. And we're not recommending any shorting until we see key levels break way below where we currently are. Think the September and August lows. Until then, it is a buy the dip environment. All right, so let's go straight to the charts and start off with the Dow Jones. So the Dow Jones could potentially have topped for this black wave 5. This is a way to interpret the price data. Okay, right here at this trend line, we can count 5 waves up from the August low. Okay, it is possible. So once again, sell into the strength, raise your stops, use trailing stops, all this good stuff. It never hurts, right? They're bull traders and old traders, but they're not old bold traders, okay? Or bold old traders, one of the two, big one order. So this could still have topped. For sure, it can. Again, the AD line and all that stuff have now not given us any forewarning that that is the case based on negative divergences that have to last for months before we can even call a top. And I think that is a very strong indicator that we should definitely keep an eye on. Once we see that, and I was tracking it, I remember in 2022, it took a long time for the AD line to finally make new all-time highs. So it is always prudent to track it. So this is option one. Is it likely? Well, we'll know if we break below these warning levels. So then the other one is that we had this protracted wave 4. As you can see here, this April-May time frame is very difficult to interpret. In fact, the whole March through August time frame is very difficult to interpret. What kind of price action is this? It's neither impulsive to the upside nor impulsive to the downside. Okay, so here we have 3 and 4 July and August. Here we have 3 in March and 4 in May. And now we're in the 1, 2, 3, 4, 5. So this one starts to count quite nicely, I must admit. Again, this could be a leading diagonal one. It's very strange price action. So excuse me if it's hard to interpret. So that's why we go by warning levels, right? Ultimately, we don't want to see price break below the August low. That is really the line in the sand with a severe warning now below the July high, which is almost equal to the October low. This would then be 1, 2, 1, 2, 3, 4, 3. That's then 3 and then 4 and then 5. And we're going to go to 44, 45,000. Okay. So also here, intermediate term remain bullish. This one, I only believe it when we break below the September low. All right. That's pretty much it. So then we move on to the NASDAQ 100 and this 3, 4, 5 impulse pattern path looks quite good here with very strong candles over the last 3 days. These are very bullish candles. Yes, we traded completely outside the upper Bollinger Band, but look at the Bollinger Bands. They are expanding. This is a strong looking chart. Price is above the rising 10, which is above the rising 20, which is above the rising 50, above the Ichimoku cloud and 200-day moving average. How much more can we say that this is a 100% bullish chart than that? So we had then 3 waves lower into the August low from the July high A, B, C, not an impulse. We already knew that the NASDAQ had made a new all-time high last week, which really put the bounce counter trend rally only scenario thesis for the NASDAQ 100 into question. It was still in play, but now, of course, with especially the Trump trade that we are currently experiencing, and if Harris was elected, it would probably be the Harris trade. But again, politics don't matter too much for the stock markets. Economic input is, of course, much more important. So that said, all that aside, we should be in wave 3, 4, and 5, continued on holding above these warning levels. Okay, quite easy. So big picture wise, this is quite a bullish wave count. Then the whole rally from the 2020 COVID crash into the 2021 high was a wave 1. And from there, we had a quite typical, let me show you. Oh, I did it in reverse, pardon my French, so to say. 61.8% retrace. Let's see if I can get anything going with stock charts. My computer's been a little slow today. Don't know what it is, but it's probably ready for a break. So there you see we have a classic there, 61.8% retrace right there. So that's typical for a second wave. And now we should be in this third wave, a fourth wave, and a fifth wave. So this bull can keep on raging higher much, much longer than most would anticipate. This is a 100% bullish chart. This is the monthly time frame. This looks extremely bullish, all right, the way I look at it. I must say 2-3 months ago, this started to look wobbly, but it has resurrected itself quite nicely, okay? And I could even be off that this was cycle 3 here. That is also fine, and we're now in cycle 5. So let's say this is 1, then this is 2, and this could even be cycle 3, for example, and this was then cycle 4, and we're now in cycle 5, okay? That's fine. Gets us to the same idea, okay? This is then our alt wave count. It all depends a little bit on how you interpret the price action. So then this, of course, 1 year long decline was a quite a steep one, right? If we look at the total decline that started here, it was a 38.2% retrace. So this is quite possible as well, as you can see, right? So we have also here a bullish resolution, and we're now in this wave 5, okay? So we can keep it like that. It's fine as well. You know, either way is fine. This is then, of course, a cycle wave. And this is then cycle 4. I'll make it a little bit bigger so you can really see the difference. But it really means that then, of course, we're in this cycle 5, which should last, of course, a couple of years. There, that's the cycle 5, right? We're fine with it. It looks bullish. This chart looks 100% bullish, and that's what we're going to stick with. So this is the SP 500. It should now be in this C wave, potentially third wave of the third wave to 60,061, 60,060. All right, so that is about 6160 plus or minus 100. We haven't even reached this ideal green target zone, which is based, of course, on the Fibonacci relationship between wave A measured from wave B and the current C wave. Normally, it is about 100%, so that should tag us there, to potentially 76.4%, which should tag us there. So it looks like 6061 should be the next target. So we've raised the warning levels for the bulls, and we remain bullish on this one as long as we stay, you know, pretty much above last week's low, right? If we stay above it, we're fine. Absolutely fine. Yes, we're overbought, all that stuff, but markets don't crash from overbought. They crash from oversold. So this is then the ideal upside target for this wave C of 3. Can still be this ending diagonal, and then a break down into, I would say, probably 5,800 plus minus 100, and then wave 5. So also this one, intermediate term and short term, remain bullish. Bigger picture wise, here you see the same wave count with in this for the SP 500 with the 1-2 setup. And in this case, we then had the primary 3 in 2017 and primary 4 at the COVID low for a protracted, irregular, expanded flat wave 4. And now we are in this 1-2 setup. Okay. And I must say, the wave labeling doesn't really matter that much. This is not an A wave. I don't know why that one showed up, but this is of course a second wave there. Excuse me, and then we'll just track along 3, 4. There you go. So we have 9 waves up into the 2021 high. Okay, and we have pretty much 3 waves lower, though very protracted there. 3, 4, 5. Right? 1, 2, 3, 4, 5, 6, 7, 8, 9. Excellent. Okay, this is then wave 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5. So also this suggests this bull is not done in a long shot. Okay, and we're looking for 7,000s before this is all done. Negative divergences have pretty much been erased. This is still a very bullish looking chart. Kudos to the bulls. You have erased a lot of negative divergences. All right, and even here we could count this, for example, as excuse me, as a alt 5 here, and then this was cycle 3, similar to, of course, that for the NASDAQ 100, and then this was cycle 4, and we pretty much, you know, just change the label, and then eventually we get cycle 5. Okay, it's very possible. I don't care too much about the labeling in that sense. What matters now is that we're in a new bull. This was definitely a year-long decline, which is of a primary degree most likely. All right, so semiconductors, we still expect this 5650, 5700 region to be finally reached for this gap fill. Okay, these are also 3 bullish-looking charts of candles, right? So we expect further upside. IWM looks a little more toppy, I would say, but I have no indication top is in place. All the warning levels for the bulls remain in the same level, and we've reached our target zone. Can still a little bit higher. Again, also this price action is quite discombobulated and therefore hard to interpret. Lots of overlap since November last year, especially here, of course, in May, June, and July. And again, here from the August low, looks again better as a ending diagonal with overthrow. But if we continue to move higher, I have to reassess this chart, and I apologize then for the flip-flopping. But again, this price action is not easy. Everything looks like 3s. That's the problem. So that's really what we have bigger picture wise. Again, so the Dow Jones can easily do another 4-5 sequence and add on another 4-5 from that if we see subdivisions. NASDAQ 100 as well, still a bullish looking chart. If we reassess the price action, then the 2020 low could easily be a cycle 4, and we're now in a cycle 5. Kind of potato, even if we do a 1-2 chart setup, as you see here. Also, that would be a cycle 5. Same for the SP 500. A 1-2 setup will also get us to a cycle 5, a cycle 3, cycle 4 path will also get us to cycle 5 of a much larger degree top. That then brings me to market breadth. Let's have a look here at the bullish percent index for the NASDAQ. A new high, bullish. All right, very simple. We need to see negative divergences to become bearish. Of course, a massive breakout, bullish. How we're doing on the AD line has not made a new all-time high yet. All right, pay attention. A little bit of a warning level of sign, but nothing crazy, okay? Nothing at all. This needs to, of course, last for many months before we start to consider it a major problem. But we're monitoring it. How about the new lows? Well, benign. This is nothing to write home about, so to say. Doesn't require any news. Long-term, strong uptrend. Simple, loud and clear. How about the PMO? Well, I don't have data for today yet, but yesterday we got a buy signal. I shared that with you yesterday. I hope you took that into consideration for any trade action you might have taken. So we've just bottomed out the ideal bottom zone, and I'm pretty sure that today will be a continuation, just as we saw here in September, from this buy signal. McClellan oscillator, yeah, it's a little, yeah, it's 6 only. It's positive, but not by much. We did bottom out here in the ideal bottom zone, so that's great. Every single time in 2024 we reached that low, we got fantastic upside reward and very little downside risk. And as such, the summation index is starting to turn up, but of course with a reading of 5 to 6, we don't get much of a upturn yet. But again, there is of course a lot of room to the upside left for this to become overbought. That's really what we have for today. Let's maybe take a quick look at sentiment. Let's see the AAII. It is Thursday, if they've done it. Yeah, it averaged 41.5% bulls. Nothing to write home about. Historically, it's 37.5. You need to see about 2 standard deviations away from the mean to start to suggest it's either a top or a bottom. And this one is not very good at top calling, much better at bottom calling. And let's have a look here then at how are we doing for the active money managers. I'm just gonna get some stock here that gets me into stock charts, and we're gonna go and look here at active money managers. How are they positioned? Are they extremely bullish or bearish? No, 88. So no over representation, so to say, no leveraging. And let's have a look, last but not least, at the CNN Fear and Greed Index. We were at fear last week and we're now in greed. Okay, but fear is a much better bottom calling indicator than greed. We can go to extreme greed. So as you see here, a week ago was neutral, 57. Yeah, okay. Yeah, most of the time market is probably greedy. It's nothing too extreme, right? We're not at extreme levels. So that really suggests there is room left for upside. And again, the wave count on the short term seems to suggest that. The wave count on the long term seems to suggest that. Okay. I really wanted to share that we have zero indication of a top in place. Quite the opposite. Things are chugging along. Seems like it. Real nice. Okay, so I expect further upside, at least NASDAQ100 to reach into the 21,500 to 22,500. That's the next level I'm kind of looking for. SP500, 60,060 to 62,060. All right, Dow Jones could have topped, but I still expect it eventually to reach 44.5 to 45,500. Semiconductors, I still expect it to reach 5650 to 5750, potentially 5850. IWM, little more concerned about this one. There are technically enough waves in place to consider a top, but we haven't broken below any warning levels. Please be advised that the price action is kind of confusing. So this feels a bit more like a guess, educated guess, than the other indexes, which are clearly following a standard impulse path more obviously than this discombobulated index. It has been discombobulated for a year plus. So please be advised that I personally don't trade it because I have no real strong conviction in the wave count. It seems to be so fluffy. So it's like it keeps changing. I don't like it, but oh well, it is what it is. I want to share it with you, and you do you, and I do I, and it's all good as long as you're making money. And as always, trade safe, raise those stops, take profits along the way. Again, I have no recommendation for selling. I don't think I've said it for a long time. And if we objectively reassess the price charts, there could be a lot more potential upside left than most people might think. All right, with that, I'll catch you all next Tuesday. Take care, trade safe, have a great weekend, and we'll see you on Tuesday.